Good morning, class. Today we're going to discuss processing transactions of a merchandising business. This PowerPoint has been uploaded. Upload na ito sa school book. Kaya please refer to the PowerPoint in the process of discussion. The topic learning outcomes determine the differences of service business with merchandising business. Illustrate the differences of the income statement of service business. Basically, class, na-discuss na natin kung paano gumawa ng income statement of service business. Now, we're going to prepare income statement of merchandising business, and we will illustrate first the differences of the two income statements. Next is that we will discuss the basic income statement accounts under merchandising business. What are the accounts na ginagamit natin in preparing an income statement of merchandising business? And these accounts are sales, cost of goods sold, gross profit, operating expenses, and net income or loss. Okay, we will illustrate the difference of service with merchandising business income statements. And lastly, we will solve exercises on how to determine the missing amounts of the basic income statements of merchandising business. For classroom purposes, we will present income statement, but such statement has a missing amount, and we will determine how to fill it up. Okay? So the types of business class. Service business, we have done with this. Natapos na natin to. We have a complete cycle, complete accounting cycle of service business. And what we are going to study now is merchandising business. And then on final, we will study manufacturing or processing business. What is merchandising business? Merchandising business, again, class, is buying goods at low price from suppliers and selling the same goods at higher price to customers. So, ang examples nito, yung all those that are engaged in trading operations, sari-sari stores, supermarket, department stores, bookstores, car traders, jewelry stores, ukay-ukay, and any other form of trading operations. In merchandising business, the business is a buyer because the business is buying from supplier, buying low goods at low price from suppliers. And the business is also a seller, selling these goods to customers at higher price. Okay, so remember this class, in merchandising business, the business is a buyer and a seller at the same time. Let's differentiate service with merchandising business. Let's first take a look into the accounts that we have used on service business. As far as asset accounts, we have cash on hand, cash in bank, receivable, prepaid expense, supplies. Yun yung basic accounts na ginamit natin for current asset accounts. And for non-current, we have used building, equipment, furnitures, and the contra accounts of building, equipment, furnitures, and fixtures. In merchandising business, on asset accounts, we will also be using cash on hand, cash in bank, receivable, and prepaid expense supplies, building, equipment, furniture. So basically, you would see that the accounts being used on service business is similar to merchandising business. The basic difference between service business and merchandising business in terms of asset is inventory. You will note, class, that we did not use inventory in service business. But in merchandising business, we will use the account inventory. Next slide. On liabilities and equity accounts, same, there is no difference between service and merchandising business. Next slide. On the revenue and expense accounts, you will note also certain differences between service business and merchandising business. We have used in service business service income as our revenue, and expenses, you're already exposed of using salaries expense, rent expense, utilities expense, and other more expenses, and you have already exposed of using budgets expense and depreciation expense. In merchandising business, there will be a great change in terms of revenue. Instead of using service income, we are going to use sales, considering that we are selling the goods. Okay? So our sales will be used as our revenue, and we will have cost of goods sold. The cost of goods sold is the cost of the items that we are selling. Okay, so we need to deduct the cost of goods sold from our sales. And on expenses, it's basically the same. There will be no change. Okay, class? Let's take a look of the accounting equation. And so we will be able to see the merchandising business in the accounting equation. Again, class, you have the debit and credit. If we will divide it into two, and if we will divide it into half of it, then you will have the statement of financial position on upper part, and the statement of financial position will consist of assets, liabilities, and equity. And under assets, you have current assets and non-current assets. So example of current assets that we have already discussed is cash, accounts receivable, allowance for doubtful accounts, prepayment to suppliers, prepaid insurance, and supplies. Okay? For liabilities, for non-current assets, we have already used equipment and accumulated depreciation. On current liabilities, we have accounts payable, loans payable. We already use this account from in service business. On non-current liabilities, loans payable long-term, and on equity, we have used already owner's capital and owner's drawing. So basically, we have used these accounts in service business. And now in merchandising business, we will have an additional account that we are going to use. And that is, let's take a look first of the income statement of service business. So the income statement for service business is the revenue is service income. And now for merchandising, the revenue is no longer service income, but instead the revenue will be sales, because we are not providing services anymore. We are providing contracting sales as our transaction. Okay? Because we have sales, we have to have the items that we are going to sell. And these items are our inventory. Okay? So this inventory will be the one to be sold to our customers. And now, if we have sold the inventory, we have sold the inventory, we will have sales. So in this case, this inventory will be reduced, and that cost of inventory will be part of what you call cost of goods sold. So if we have sold this inventory, we will have cost of goods sold. Okay? And now, oh, by the way, class, please be reminded that cost of goods sold is sometimes called also cost of sales. They are synonymous. Cost of goods sold, cost of sales are the same. Okay? So on expenses, there are no differences between service and merchandising business. We also have salaries, rent, utilities, supplies expense, budgets, and depreciation. Okay. Next slide. So now class, I want to show to you now the difference in presenting income statements between service and merchandising. In service business, we have our revenue, and that is our service income, less expenses, and we have the different types of expenses. So revenue minus expenses will give you your net profit or net loss. Okay, class? But in merchandising business, okay, the presentation of income statement will be, we have the same thing, revenue, and revenue is sales. Okay, we will deduct from sales the cost of goods sold. So sales less cost of goods sold will give you your gross profit. So sales less cost of goods sold will give you your gross profit. Okay? So this is the basic difference between service income and merchandising. Okay, class? And from gross profit, we will deduct expenses. So you will deduct salaries, rent, utilities, bad debts, and other expenses. And the total expenses will be deducted from gross profit, and that will give you your net profit or net income or net loss. Okay? Again, class, I would like to emphasize that in merchandising business, the income statement, the basic income statement is presented as sales less cost of goods sold will give you your gross profit, less expenses will give you your net profit. Next slide, please. So again, class, the presentation of income statement, sales less cost of goods sold will give you your gross profit, less expenses will give you your net profit. Let's put an absolute amount on this accounts. If our sales is 48,750 and our cost of goods sold is 32,500, how much is our gross profit? Okay? So we have to deduct 32,500 from 48,750. So in this case, our gross profit is 16,250. Less expenses, assuming that we have an expense of 10,000, we will have a net profit of 6,250. Okay, class, so basically this is the equation of the income statement of merchandising business. We have sales, less cost of goods sold will give you your gross profit, less expenses will give you your net profit. Now class, for classroom purposes, we have to, there are certain situations for classroom purposes that certain amounts in the income statement is or are missing. So in this case, like case A, sales less cost of goods sold will give you your gross profit, less expenses will give you your net profit. Assuming that your sales is 440,000 and your cost of goods sold is missing, and you have a gross profit of 215,000, assuming your expenses is missing, so you have a net profit of 75,000. So in this case, class, you can solve first cost of goods sold or expenses, whichever, because there are two numbers that are available. Make sure that two numbers are available for you to solve the missing amounts. So let's solve first sales. So in as much as our income statement presentation is that sales minus cost of goods sold equals gross profits. And if you have the gross profit, okay, you can deduct the gross profit from your sales. So in this case, 440,000 minus 215,000 will give you 225,000. So now to solve expenses, you need the gross profit and the net profit. In as much as the equation would require gross profit minus expenses will give you your net profit. So what we can do is gross profit minus net profit will give you your expenses. Okay? So let's go with another case. Sales less cost of goods sold equals gross profit, less expenses equals net profit. So if our sales is missing, our cost of goods sold is 185,000. Our gross profit is 75,000. Our expenses is 105,000 and our net profit is missing. Considering that sales consists of cost of goods sold and gross profit, okay? So we just have to add these two. 185,000 plus 75,000 will give you 260,000. So here, class, it's we can deduct right away 105,000. So 75,000 minus 105,000, okay, it will give us a negative 30,000. So it's a net loss. So it's not net profit, but it is a net loss. Okay? Questions, class? I will handle your questions later. Okay. So case C. Sales less cost of goods sold will give you your gross profit, less expenses will give you your net profit. Suppose that you have 870,000 sales. Cost of goods sold is 640,000, so gross profit is missing. Your expenses is missing, so you have net profit. Okay? Or net loss in this case because it's a negative net loss. So you need to have two amounts so you can solve the missing amount. So in this case, you have sales less cost of goods sold, so 870,000 minus 640,000 will give you 230,000. Okay? And now you need the gross profit and net profit to get your expenses. Okay? So 230,000 minus expenses gave a negative amount of 90,000. So what does it mean? It means the reason why it is negative because you are deducting a higher amount from gross profits. So in this case, okay, you have to add the 90,000 when it is negative. You have to add the 90,000 to 230,000. If this is positive, okay, you just have to deduct. But this is negative, so you have to add 90.
It's 8 o'clock.
From 230,000. So in this case, 230,000 plus 90,000 will give you 320,000. So 230,000 minus 320,000 will give you a negative of 90,000. So in this case, this is a net loss. Okay? Next is sales again, less cost of goods sold will give you your gross profit, less expenses will give you your net profit. So assuming that you have 1,250,000 sales, your cost of goods sold is missing, your gross profit is missing, your expenses is 275,000, and your net profit is 150,000. So here you cannot compute cost of goods sold and gross profit because you have to have two numbers. You cannot compute cost of goods sold because gross profit is missing. You cannot compute gross profit because cost of goods sold is missing. So we will have to start here. Here what we had, oh, by the way, you cannot compute cost of goods sold because gross profit is missing. So we need to find out first the gross profit. So to find the gross profit, okay, we have to add expenses and net profit. So in this case, the amount is 425,000. So if we were able to find out 425,000, we can deduct this from 1,250,000. Okay? That will give you 825,000. Okay, class. Next, last exercise. So our sales is 1,300,500. Less cost of goods sold will give you your gross profit. Our expenses is missing. Our net profit or net loss in this case, a negative of 95,750. Okay? So we can compute cost of goods sold and expenses, whichever you want to compute it first. But normally it is better if the two amounts are available. It's better to start it from the top. Okay, so in this case, to compute cost of goods sold, we will deduct 579,250 from sales. So we will able to determine the cost of goods sold at 721,250. So this is negative again. So instead of deducting this amount, we will add because this is negative. If it is negative, we will have to add. So 579,250 plus 95,750 will give you 675,000. Okay, class? So, any questions? Just transmit your questions in our group chat. Okay? Have a nice day, class.